Welcome to Higher Education Advocates Podcast. This podcast is about supporting students and families as they navigate through the post-secondary complexities of college. From time to time, I will touch base on current events. Expect to hear jam-packed information that includes strategies and tips. The goal is to empower families and help them make informed decisions. Expect to hear from higher education professionals, HR professionals, tax pros, mental health professionals, financial aid administrators, students, parents, plus more. My name is Teresa Harris, and I'm a college financial aid expert. I'm also the founder and owner of Scholarship Momma. I have a master's in higher education, and I am an alum of Robert Morris University in Chicago. I'm a wife, mom, and grandmother. My heart is for our youth, but the information I'm sharing is relevant for all age groups. When it comes to college, my experience as an adult student was fantastic. I was eager to learn and ready to start a new career, and the only way I could pay for college was to borrow loans. One thing I failed to realize is the impact student loans would have on my future. I borrowed thousands of dollars during my undergraduate career, and as time went on, the amount I owed ballooned. As of this recording, I'm still paying off student loans, and I completed college years ago. For the record, I don't have anything against student loans, but I do believe in responsible borrowing, which is something I didn't do. As for the podcast, expect to hear from me on a bi-weekly basis. This podcast is available on Anchor FM and Scholarship Momma YouTube channel. For more information, check out my website, www.scholarshipmomma.com. Welcome to Higher Education Advocates Podcast. Hey friends, this week's podcast, I'm interviewing a person who defaulted on their student loan. Defaulting on your student loan is a big thing, and it has consequences. I will define default shortly, but our guest on today's podcast is Chuck. Chuck is a warranty administrator with a major company. As a teenager, his first job was with his uncle in his automotive business, which led to his career in the automotive industry. Welcome, Chuck. Tell us a little bit about yourself.
Well, thank you so much. I am the youngest of three, and born and raised from Chicago, of course. Education has always been a strong standpoint of, the household and everything. As far as the goals that I've set and accomplished, they've always have been routed to, my educational credentials. And I've just had an understanding from a young age that education is needed to get you where you want to be in life.
Awesome. I couldn't agree more. Hey, friends, before we get started, let me define default. And I found this information under studentaid.gov. So here is what default is. The first day after you miss a student loan payment, your loan becomes past due or delinquent. If your loan continues to be delinquent, the loan might go into default. Now, it does depend on what type of loan you have. You can have a federal direct loan or FEP loan, which is called Family Education Loan Program. That's a loan program prior to the federal direct loan. Also, if you don't make your payments for at least 270 days, a person is considered in default. And so Chuck is going to talk to us today about default. He went into student loan default. So, Chuck, can you tell us a little bit about your education background, like the colleges you attended?
Yes. So I did attend Harry S. Truman City College for my Associates of Applied Science, with, of course, the focus being on automotive technology. I did complete that program with honors, and then continued my education with Southern Illinois University, and they had what's called the Bridge Program. And the unique thing about this program is that you were able to attend Truman on Saturdays and Sundays for 8 hours a day. and it would pretty much be the same hours in a normal course for you attending downstate. So what I was able to do was I was able to save a lot of money as far as the loan money I needed to complete my education by being able to stay here and get the quality education from SIU's curriculum, all while being at home. But, I did have to take out loans, of course, because, you still got to pay SIUC prices for the SIUC education. So I did have to take out a loan. It wasn't that bad. I believe the amount at the end of the day was about $32,000 total.
Okay, and that was one of my questions. So you borrowed $32,000 in student loans to finance your education at SIU. Let's be clear, you borrowed student loans at SIU and not at Truman, correct?
Correct. Now, this was back in the times where, you automatically was able to go to the city college upon completing your high school, diploma. So this is back when the MAP grant and Pell grants, there were various grants, and you were able to pretty much attend and, have the cost covered. Now, there were scholarships as well, but, you really didn't know of none until, you kind of just heard someone just luck up on one, and then you'll be like, hey, how'd you get that $1,000 scholarship? And it's like, oh, well, you're an automotive student and you're this and you fit the criteria and you apply and you just may get it. And, I'm sure various scholarships and things out there, but, we have people like you to help us with that nowadays. So we don't miss those things.
Well, let me ask you something. Did you know that you borrowed that amount? Did you know that you borrowed approximately $32,000 to finance your education at SIU, or did it end up being $32,000 after you completed your education? Which one was it?
Well, it ended up being, so after I completed my education, it was $32,000 in total. The way the program worked is the core classes were taken at Truman with SIU, and I still had to get the other electives completed out on off campus at another site. So majority of the funds did go to finance it at other site, because obviously if I'm taking just electives, I'm not a full-time student, which means more than likely I would have to pay out of pocket for those 6 or 7 credit hours towards whatever elective is needed in conjunction with the bachelor's degree curriculum. So, some money did go to SIU, and, some of it went there as far as the elective. So it was in between the two. But the bottom line when I was done was $32K. That was the bottom line of how much I owed.
Okay, so then what you're saying is that you borrowed some loans for your education at SIU to take those courses, but you also had to borrow loans at another school to take some other courses as well. So you borrowed loans at 2 different schools? Is that what you're saying?
Well, yeah, because I was able to get, when I got the loan and with the way the curriculum worked, when you got the loan, you had the funds to, it was enough funds to finance the credit hours that I needed to pay for SIU. And then I would still have funds available for what I was able to take out. So I would be able to use those funds for the DeVry campus. So it would be one loan, but I was able to use those funds to fund the SIU curriculum. And part of that curriculum is electives that I need to take off campus, but it was enough to cover that as well. And I did have a job as well to, put some cash towards it, not much, but, some. So it just ended up working out that way.
Okay. So can you tell us the process about student loans? And so when you graduated, and this is an assumption, please correct me if I'm wrong. When you graduated, did you start paying on your student loans? What happened?
Well, when I graduated, the unfortunate thing about the auto industry is it takes some time. I mean, as with any other industry, it takes time to actually find a job that's good for you, that you love, that you want to, kind of stay at. So in my case, what ended up happening was I did graduate. And when I graduated, I made it a point to start paying on them because I don't want this to be something that's just, lingering over me and things of that nature. So I at least started off with $100 a month towards my student loans. And I pretty much voluntarily did that. So I'm not sure if they give you like a 6-minute grace period or they give you something of that nature. But right off the gate, I made it a point to start paying off this big loan because this is a big loan. This is the most money I owe anyone. So as long as I'm chipping away at it from the beginning of time, eventually it'll be gone. And, that plan worked for a while. And, but life happens. I had some unfortunate things happen. Some unfortunate situations take place. And, I ended up not being able to afford to pay it.
So when you graduated, you paid $100 a month, and you said something that was key. It sounded like you didn't wait for your grace period because you said I'm not sure if it was 6 months or whatever. But I just started paying, and so it sounded like you immediately started paying. You didn't wait for the 6 months grace period, which students do get, by the way, when they graduate school or drop it at halftime. There's a grace period that you get that will allow you to find a job and pay on your student loans. And so if I heard you correctly, what you said is I started paying immediately, and I started paying $100 a month on my student loans. Is that correct in what I heard?
That is correct. And one of the things from a strategical financial standpoint, taking the grace period is fine. But if you, for example, with 6 months, if you get paid twice a month, that's 12 payments. Just by paying $100, you've already paid $1,200 down. That's not a huge amount, but when it comes time to look at you and say, hey, look, what is he doing with his student loans? Oh, he's already established a payment. That's $100. That's consistent. And they'll leave you with that, even though normally I believe they would do some type of evaluation or something to see how much you can pay or something of that nature. I'm not really sure how it works because from my standpoint, I've already had something established with them. So they'll pretty much leave you alone if you have something established beforehand versus them taking, your check stubs and then taking the determination of, hey, you can afford to pay this much. This is how much we need. And so I that's just a suggestion for me.
Okay. So was your payment, since you decided to make your payments of $100 a month prior to your payments being due, you paying correctly? So if your payments were $100 a month, the lender said that your payments were more or less. What did the lender say your payments were?
Well, the lenders pretty much with the lenders, they'll try to put you on a plan that's more short term with a larger amount versus a lower amount over a longer period of time. But I mean, there are many ways to kind of work with them because at the end of the day, as long as you let them know, hey, the amount you're requesting me to pay, I can't afford, but I can afford this amount and you'll get that amount on time. They'll pretty much work with you and allow it. Because when my grace period, from what I can remember, when my grace period was over and I had that $100 payment established, I can remember them saying, well, based off our information and this and that, the required payment was supposed to be $136 and some change. But since I already had 12 on-time payments, and that's another thing, on-time payments. It's a key thing when it comes to student loans, on-time payments. Because what they said was, you owe $136.50 is the required amount. Normally, that's what we would require you to pay after your grace period. But since you established a payment plan and you've had 12 consecutive payments of $100 and we know you can afford that, they put a request in for my plan to be that amount. And it went through. And one of the key factors of it is because I already had this established amount earlier on. And even though they told me, hey, you're required to pay more, there's documentation that I can't afford that, but I can afford 100. And you've seen me do this on time 12 times in a row. And they'll take that versus trying to force 36 more bucks out of you, then it's short. Or you make that one payment of $136.50, then you miss the next one. So it's all about communication. It's all about just being informed, and it's all about taking people's names, extensions, and emails when you can.
Sounds
Uh,
like a game plan. So my question to you as well is, did you ever establish, since you, just to repeat what you said, started paying on your student loans immediately after you finished school? Did you ever establish a repayment plan with the lender? Because, and listeners, so you know, as a financial aid administrator, this is some of the things that we talk with students about as they go into repayment, about establishing a repayment plan with the lender. And for my listeners, there's all types of repayment plans that we really won't be discussing today. But one repayment plan is a standard repayment plan, which basically means you will pay off your loan in 10 years. And so I'm drilling and I'm asking Chuck about his agreement with the lender, because these are some of the things that you need to know. And what he's saying is, I paid on my student loans immediately, and I made 2 payments a month, so they were okay with that. So that said, Chuck, something happened for you to stop making those payments. So what happened?
yes. So what ended up happening was I was, I started with, after SIU, I was working at a hotel. And I was working at this hotel for a while. That was fine. Then I ended up switching jobs into the warranty group. And that was my first job out of SIU. It was the number one warranty company in the world. They had various divisions for automotive, homes, electronics. You name it, it has a warranty. They probably had a division for it. And this was an international, and everything was cool. You know, I came out of college, 25. I had my first child, starting a family. You know, everything's, going like they're supposed to. And they did they started outsourcing the company. And, when you work for an international company, there's always a risk of that happening as a North American employee, because when it's an international company, America is just another sector. Like, this is a sector, Europe's a sector, it's just another place. And the unfortunate thing is, my job, even though it's heavily knowledge-based, and the more knowledgeable you are, the more accurate decision you would make as far as the claim adjudication process and being cost-effective and things of that nature. But you could pay someone in another country 3 times what you're paying me to do the same thing. And from a company standpoint, the money saved, was just more important, and that's just what it is. So they started outsourcing. Unfortunately for me, I did get let go. And when I got let go, that led to, my expenses obviously taking a hard hit. I got more expenses, my family, grew. So it became a lot, and I wasn't able to keep up with it. So I did default on my student. I did fall behind, stop making payments. I got warnings, and then I didn't get warnings. But I did end up moving a couple of places within that tough time. So when I finally did settle at my home, I was getting warning letters, and I was trying to establish something. Like, I would, when I was my back against the wall on the brink, and they were like, okay, look, if you don't send us something, we're going to have to look at something else. And, and I would come up with 100, I would come up with 100 again. And then I was able to get an extension / forbearance. The forbearance, they ended up giving me that once. And then I believe I broke the terms of that. And, back against the wall, pretty much couldn't do anything. And apparently what happened was, and what ended up happening was, they pretty much sent me a letter to my new home. Now, I settled at one home and everything was fine, but then my family increased again. So I, moved to another home. And I was, at the home I'm currently at, actually. And I got a letter in the mail from them, and I hadn't gotten any letters from them at all in my entire place of being here. And I've been here, I believe, 7 or 8 months already. And the letter pretty much was a wage garnishment letter. And it was letting me know that, hey, we've reached out to you. We gave you 30 days to contest this. We've called. We've worked this out with you. we've tried to work this out with you, but we've reached out to your employer and the garnishment starts next week, next check.
Oh, wow.
And yeah, pretty much next check. And what ended up happening was that next morning, that next day, I got checked my email, and I had an email from payroll like, hey, yeah, they're going to start taking 15% of your check. And also at the time, another garnishment was coming on me, unfortunately, as well for something else for vehicle that I had. So the garnishment was coming out for that as well. So I already I knew that was coming. And what ended up happening was, and this is how serious it is. At first, that first garnishment was 15%, and the Department of Aid was supposed to be 10%. The Department of Education was supposed to be 10%. Because they're a government agency, they have priority. So they ended up getting the 15%, and the car loan people ended up having to take the 10%. That's how serious they were with it. And I laugh about it now because I'm out of that tough situation, thank God, because I thought I would never get out of it. But yeah, and so I called the Department of Ed because I'm like, hey, you guys say in the study, you've been sending me warnings and letters, and you've been calling me. I haven't gotten any phone calls from you guys, and I haven't gotten any letters from you all. And so the representative on the phone, and I remember this like it happened yesterday, she was like, well, unfortunately, at this time, when you receive that letter, your wages are going to be garnished and there's nothing you can do. And I was like, well, do I have any option? And she was like, yep, let me put you on hold. She came back off hold. There were 3 options. She was like, I can pay a lump sum. Now, here's the thing. I did make some payments from the $30,000 that I owed. So I got the loan down to $22K. So I'm at $22,000. That's with interest and stuff. So I made some payments. So I'm at $22,000. And she was like, you can pay the whole thing for $1,750, right? $17,500. Would you like to do that today? And I kind of laughed, and I was like, well, if I had that right now, I wouldn't be on the phone with you. I mean, I would, I would be making my on-time payments and spending that money more graciously. And then she said, well, another thing you can do is we can put you on a fast track repayment plan where I pay a fast track no interest repayment plan. So the interest is about $3,000, which means it's about $19,000 that I actually owe cash. And what they would do is take half of that and then put me on a no interest plan for 5 years, meaning that I would have to give them $9,500, right, from 19, and then the other $9,500 over the next 60 months, they would put me on a payment plan. And I was like, no, that doesn't work either. And which, by the way, none of these plans get you off the garnishment, by the way. I mean, well, I'm sorry. Those first 2 plans get you off the garnishment. So either you have $17,500 and you can get off this garnishment and it's paid in full, or you have $9,500 to pay half and you get on a fast track, no interest repayment plan. Those are the only 2 options that get you off of a garnishment. Obviously, common sense would tell you they don't have that money. If they had that money laying around, they would be on time on their loans. So I don't want to say it's a finesse game to it, but it's kind of like those 2 options, probably 99.7% of people call, and those first 2 options are not an option. So the last option is to do a what's called the loan rehabilitation program. Now, when your wages are garnished, this has to happen. Now, here's the thing. Now, what they do is you send all your information to them, your check stubs, you send your bills, anything that you pay money to take care of, send it to them because they take that into account. At the time, I had rent, a car note, my son's expenses, light bill, gas bill, just normal everyday things like everyone else has. And what they did, they took that, compared it to my check stub, and they was like, okay, we can put you on a loan rehabilitation program where it's a 9-month program. And I have to make 5 on-time consecutive payments. And my amount was $10.
Okay.
Now,
Wow.
here's the thing. Now, you make $10 a month payment, 5 consecutive months. and then you'll be eligible. You'll be out of default, and you can set up and establish a new plan with a new collector, a new lender or collector or whatnot, which is Navient for me now. So I'm working with Navient.
Okay.
Now, I was like, now when I heard that, I was like, oh, okay, well, look, just run it for 50, apply $10 to each month, and we're good to go. Unfortunately, during that program, the garnishment stays in effect those 5 months. So the $140 they took every 2 weeks mandatorily is going to take place for 5 months. And I still have to make the $10 payment on time as well. If I don't make the $10 payment on time, the program starts all over again, including while the wage garnishment still continues, by the way. So I was kind of upset because and I asked the representative, I was like, well, you guys were able to find me to tell me that you're going to take my money. How are you not able to find me for the warnings? She was like, unfortunately, when we send the warnings out, it's a generated letter. So it would just send it to the address that was on file, which was my last home, and there's no mail forwarding on that. And when they do the garnishment paperwork, they run my social, which gives my employer, my current employer. And by default, my current employer is going to have my address that's on file currently. And that's how they found my correct address and were able to tell me that we're going to start taking your money. So they weren't able to find me to warn me about it, but they were able to find me to let me know when it was finalized. And it was, and it kind of upset me a little bit because I'm like, well, the plan is set up to where they benefit because, yeah, you can see on paper, I can only afford to pay $10, but you're still going to snatch your 140. You're going to touch my check before I touch it, though. And this must happen for 5 months. So it was something harsh, but, over time, things got better, but definitely want to stay in tune with your lender on that. I talk to mine every 30 days, and I make sure I call them on the first of the month. I'll ask them 2 specific questions. How much do I owe? And do you need any payments from me right now? And right now, with everything that's going on, obviously it's a pass on it. They extended my it's on the tip of my tongue. I can't think of it because I don't have to make a payment right now. So I guess it's like
it's an administrative forbearance and for the business. Yeah,
yes,
the CARES Act. All student loan lenders have to follow that law right now, and so anyone who owes student loans are in forbearance, and so that is what Chuck is talking about right now. His loan is in forbearance.
Yeah. Yes, ma'am. So
Chuck, your payments. Prior to your loans going into forbearance, and by the way, you said a mouthful there with the whole process of your loans going into default. Thank you so much for sharing that information. With your payments prior to this administrative forbearance, you said you were paying $140 bi-weekly and then plus $10. And so you are out of default now. What were your new payments? What were your new payments with Navient? Do you mind sharing that?
Not at all. So what I was able to do was, since I got it down to $22K with Navient, what I was able to work out was an income-based repayment plan. And pretty much, as long as you pay $20 a month, pretty much, and that's based off the income. So if your income changes, now you have to redo this plan with them because this is based off your income. But I have an income-based repayment plan. My plan is $20 monthly. Excuse me, that's bi-weekly. So it's $20 bi-weekly. And that's all I'm required to make. And it's based off income. And you have to update your income if you change. And as long as you make those payments, you're on time, you're good. And one of the things I do encourage, though, if you can pay more, you know what I mean? Because when you have these student loans come off of your And I don't think people really realize how much it hurts your credit when you're behind or when you're defaulted. On your credit report, if you have a loan here, a loan there and they're all from school from different terms, they're going to look like 12 loans that you've defaulted on. And I want you to, and when I came on time with Navient on my student loans, my credit score went up 50 points instantly. And that was just by coming out of it. Now, it was forceful with the garnishment, yes. But at the end of the day, on paper, it looks like I put a little bit of money towards each loan. So they were all on time. And I encourage you to do the same without the garnishment. I encourage you to do the same if possible.
Great tip.
But yeah, work with your lender and be honest. Don't tell them fables. Don't tell them lies. That if you can't afford to pay it, you just can't. And just let them know, like, hey, look, that's just too much. Now, I had some unfortunate situations, but again, just be smart and strategical about the repayment and you'll be fine.
All right. Well, thank you for sharing those tips with my listeners. With default, I have two more questions for you. With your default, did you accrue any interest and penalties with that?
With the interest stays there for the term of the loan. So the interest just continuously tax on little money as time goes along. But with Navient and the repayment plan that I have, the interest is actually locked. So the interest doesn't keep tacking on, you know what I mean? It doesn't keep going with time. It's like, okay, this is the amount. This is the interest on that amount. That's it. Like, this is it. I believe when you have it with the Department of Education, as time goes, I believe the interest grows or something of that nature. I don't know, but I know it's different. Like Navient, the way it's set up with Navient, this is the amount I owe. It doesn't increase at all.
Okay. And then here's my last question for you. There are a lot of changes as it pertains to higher education and the student loan industry. And these changes are happening in Washington. And these conversations actually are being discussed all over the United States. As a student loan borrower and as Washington is making these decisions, would you like to offer any comments to our legislators?
Our legislators in regards to student loans?
Yes, because a lot of people want to see the student loan industry change. And if you had something to say, and that's if you don't have to offer your opinion, what would you like to see change?
Well, one of the first things I would like to see change is the information provided and the scholarships made available. And that's why I'm glad we have people like you in the world, because in the automotive industry, when I got the SIU, and in the bridge program towards my last year there as a senior, there was this guy named Omar Trinidad. And what he was the counselor for off-campus programs. And what he was able to do was he was able to tell us about scholarships that were made available. And he comes through one weekend, slaps a sheet of paper on everyone's desk, and it's about 50 scholarships that we're all eligible for just because we're studying something automotive. Okay. Literally, just because we're studying something automotive. So if there's a way to get the information to people that there is a way that you can achieve this goal that you set for your life, and you don't have to come out of pocket for necessarily every single penny of it, those type of resources need to be made more readily available for people who are young that don't know how finances and economics work. And it would be helpful for them because, everyone starts off young, but we all grow as adults and we all, have that burden of paying student loans back. But if I have the burden of paying, even if I have to pay only 18 instead of 20, I'll take that. You know what I mean? If there's a scholarship that pays $2,000 to help me out, you know what I mean? And those types of resources need to be made more readily available for people that are trying to accomplish goals they've set for themselves. So I would say making those resources more readily available and just educating people on how to be more responsible with student loans, because a lot of Americans default on them. And I would like to see an income-based repayment plan for everybody, because it shouldn't be based on how much you borrowed and the amount of time it would take divided by 10 years, because $250,000 divided by 10 years is going to be a different monthly payment from $20,000 divided by 10 years. So, I would like to see an income-based repayment plan for everyone, because it gives a fair chance. It doesn't say, hey, you borrowed this is how much we needed, and we need it in 10 years. This says, hey, this is how much you make. This is how much you should be able to pay based off how much you make. And okay, that's cool with us, because it's based off how much you make, just not much how much you borrow. So those two things, I believe, will lead to a much more positive result nationwide as far as how that whole thing is handled.
Awesome. Well, thank you for your input. To my listeners, I want to talk to you. I want to share some things with you about the consequences of going into student loan default. There's a lot, but I just wanted to share a few tips with you. You can lose your eligibility for additional student aid. Your wages may be garnished. That's what Chuck said. His wages were garnished. Or your tax refund and your federal benefit payments may be withheld and applied repayment of your defaulted student loan. Now, I was kind of caught off guard when they said federal benefit payments. So I did some research. And that research is, it could be your Social Security check. And so we don't want that. So that can be withheld. And then depending on your career, your job might be in jeopardy. And so these are some of the consequences of default. Listeners, defaulting on federal student loans is serious. If you have problems making payments on your student loans, please contact your student loan servicer. Thank you, Chuck, for taking the time to talk to me and to my listeners on today. And
thank you. Thank you, Scholarship Mama. I appreciate it. Definitely appreciate you having me on, and thank you so much for all your efforts and all of that you do, because you're great, and we need this. The world needs this.
Well, thank you. And thanks to all my listeners. Until next time, take care.
All right.